Welcome to the Lodhi Roundup, your go-to podcast for navigating Ontario's real estate market. I'm Majid Lodhi, and I've been a real estate broker here in the GTA for the last 10 years. Today, we have a special guest, and I've known this person for the last 15 years. He is very knowledgeable in the GTA or the Ontario real estate market, very knowledgeable in active and passive real estate opportunities. He himself has built him a very good portfolio over the last decade and is somebody that I work or have worked very closely with. He is also someone who holds a Bachelor of Commerce from Ryerson University. Ramaan Kangatharan, welcome to the Lodhi Roundup.
Thank you for the great introduction, Majid. It is a pleasure to be on your show today. I've known Majid for the past 15 years and we've seen a lot of growth in real estate together. We've seen some great things in the market, ups, down, and I'm excited to discuss those things today and see how our conversation goes.
100%. And I guess this podcast is an evolution of our journey where about, I think 7 years ago, we probably did our first video together in a listing in Ajax, and it took us about probably half an hour to say 2 lines at the intro for the video. So it's been, of course, a very long journey and something that I guess we do cherish, and for years to come we will cherish. But content and podcast, I think it's our first one. So welcome, I guess, to a new chapter in my journey, and I'm assuming your journey as well.
100%.
And the Lodhi Roundup is obviously a platform where we talk all things in relating to real estate, but also life, as I think that's important. And I know you being a family man, also have a beautiful 1.5-year-old daughter now.
Yes, sir. She's 1.5.
And how is parenthood, or I guess fatherhood, been?
I mean, it brought a lot of changes to the career life, whereas before it was go with work. Now there is a time commitment change where, baby comes first and then work. So it's been a change to life, but all great things. And it definitely gives you a different perspective on life.
How's the balance been between, of course, work and family, and now with the kid? I know you had your hands tied up with a lot of things before, but how's the balance been now?
Well, I guess first year it was a lot more baby than business, but now that we have our hands on things and we've started to understand more how it works and how the baby schedule is and whatnot, I've been able to balance things back out. One thing that you come to realize is, where do you want to invest your money and time, mainly time, because you don't have as much of it anymore to yourself. So how you invest it is very important.
I know you said schedule, and from the Ramaan that I know for the last few years, schedule is very important, and everybody runs around Ramaan's schedule. So whose schedule are you running around right now?
That's a very good question. Schedule wise, I mean, it is based a little more on family time right now. I am converting it more back to my schedule, but I don't think it will ever go back to just being on my schedule all day.
Does the baby call the shots now?
She does.
Interesting.
She does.
Interesting. That's interesting. And I know when we were in school back in Ryerson, like for me, at the beginning, real estate was never an option, or I didn't know that I would eventually end up in real estate. But for you, I know you've been in real estate for since second year of Ryerson, so I believe about 2011 for you. Why real estate?
It's a great question. I mean, I did do IT and business management at Ryerson. While I was doing that program, I've always seen my dad investing in real estate and be very successful at it. I've seen people in his circle as well be very successful at it. So it always intrigued me to see what the depth behind real estate investing was. So once we got into it, once we were in university, I got into real estate. He gave me the push I needed. And once I started to understand how real estate works, I wanted to learn more about it. So I started focusing on a sector of real estate at that time that wasn't really, I guess, wasn't really a big focus for a lot of people, which was new home investing. And we really liked the low rise side of it. We didn't really focus in the condo side. We pushed very heavy. We were able to actually make deals at that time with builders where we go, hey, you know what? We'll take 15 homes, we'll take 20 homes. What discount can you do for us? What can you give the client? So when we were able to capitalize on that, clients were actually very attracted to this as well, because they were like, okay, we can go directly, and this is what we're getting. But when we're coming with you, this is what we're getting. So it was something that we were able to really run with, and we ran with it for a few years. We did really well, and that was really the foundation to the business. And as working with people, one thing I came to understand more was I love working with people. I mean, I can naturally be transparent with them, and it's a relationship-based business, and it was something that I naturally was good at. So I focused on it, and then I realized the people around me, I also wanted in the business with me, because it's always better to grow together. And that's a whole different conversation. But it's a great industry. It will always be a great industry for the people that are interested in people, homes, investments, and the multitude of.
Like you said, it's a very good industry, but you got to do justice to the people, and you have
100%.
to basically treat everybody right, and obviously be honest, right? I know we at so I guess before we get into that, I was just gonna say we at Rosemount, but I wanted to ask you about I know early on in your career, or I guess the journey of real estate, you also decided to open up your own brand, who I work for as well. Why not just be a salesperson, sell homes, and call it a day, right? Why was it important for you to have your own brand, your own office, and why?
See, that's a very big question, but I guess I can get into segments of it, which is when I saw the potential success in real estate for young people, I always wanted to put together a team of people that I could work with where we can grow together. And I mean, as you can think back to when we started the company, I believe next year's our 10-year anniversary, we started off with, you, me, and a few other guys that were all IT business background guys.
Yeah.
Surprisingly, we all
most of the guys in that early phase of our life were from Ryerson. We all did business technology management
100%.
and somehow jumped into real estate.
Yeah, and when we got in together, we all understood that perspective. I mean, you switched over from a well-paying job where you were doing successfully, growing through the IT field, and you were able to see the side of real estate where, there's no ceiling to the business.
The potential was there, but of course, it was also a daunting task to,
100%.
of course, switch from a full-time job, which I was trying to, of course, be stable in and work in. And then my friend here comes along one day while I was at work, wanted to have lunch and put something in my ear. It's like, get into real estate. And here we are about a decade after. Have been, of course, working together, and it's been a great journey. But I guess to your point where I guess you wanted to just grow together and have control over everything
100%.
that you would be doing.
And when we initially started, and we put that together, the thought process was whoever comes, whoever works, let's do the best we can. We followed really no set principles. Our goal was you protect the client, you're always honest with them. All the business you brought back, we focused on referral and repeat. We didn't market. I didn't market, you didn't market, most of the guys on our team didn't market. So it was a different style of business that we were trying to do, but on the opposite side, there was a lot of learning we were doing while doing it. Till this day, we're learning how we can do things differently, what changes we need to do, what building we can do. And all that is progress, I believe. And there's been a lot of growth, and it's been a lesson. It's been a life full of lessons since we've got into the industry.
Yeah, and as you mentioned that we haven't done any actual advertisement because our business, and I think the greatest way to build your business is word of mouth, where
100%.
people who do come to you already kind of trust you, and it's easier to do business that way.
Yep.
But do you see that changing though now?
Ideally, that's been the principle behind my business for the past 13 years. Even when we were focusing heavily on investors, then, switched over to homeowners as well and, diversified the business. I don't personally want to move away from that concept because when you're working with people that come to work with you, that was referred to you by someone else you worked with, they already know you will do the best for them. And I think that's what's been a key role in our success because not just myself, yourself, and our team, we've done good by the people that we worked with, and they've come back to work with us multiple times throughout the years. So that means we're doing something right, and I want to continue on that path. And I guess to simply answer that answer, no, I would like to stick and focus to this.
Because like we have heard through various seminars, conferences, even coaching that we have indulged into occasionally, that I guess the people that you have, treat them well and
100%.
you'll be taken care of, right? So,
Yep.
but that also goes back to the business, treat the business well and not the way, I guess,
Yes.
social media is portraying the business right now, that is very glamorous and you're getting checks left and right. But the business itself is very tailored towards your client and
100%.
the needs. I know myself, the focus is where you try to situate, I guess, real estate, if that's a house, condo, whatever, but to the needs of the client or the lifestyle of the client. I know initially, and we've always talked about this, where we always want to do right by the client, but that fits their lifestyle,
Yep.
right? You can't buy somebody a house for $1 million, but they can only afford 700.
No.
Right? So it's always been what fits your lifestyle, because what fits your lifestyle does not fit mine.
Exactly.
And what fits mine does not fit Bob, right?
Yep.
So, and that's why real estate is very personalized.
Yep.
It's not just one size fits everybody. But also, I know the approach that we have taken at our brokerage, but also just you and I, it's an educational approach, right? It's not just, I know the details, just follow what I say. But the truth is that at times clients know more than us because the information is out there on the internet, right? It's not what it used to be 10, 15, 20 years ago. I guess well before we got into the real estate, that we used to actually hold the information, but now the data is out there, right?
Exactly.
Everybody knows.
See, the thing is, a lot of it's raw data to the client, right? They see a lot of things. They have access to everything now, like you said. What our job is basically being a little bit of a dictionary or translator for them, where we help them understand that data and information more. I think that's the role we're playing, especially towards the last 2-3 years, because people can see sold prices online. There's certain websites that estimate the value of the home for the client, but the client needs to know how to translate that. It's not always what it shows there, right? Like an estimated value, I find a lot of the times it's off from what the real value of the home is. Sure, with AI kicking in a few more years, it'll probably be more precise, but currently it's not there just yet. So during this time, what you got to do is, or what we are doing is, we're explaining to the client what this really means. And other things is based on the trends and what we're seeing in the economy and the market, we can tailor that towards them a little more and say, hey, you know what, this is what we believe and this is what our opinion is. And you help them understand that a little more.
I think you touched on 2 points. One, I'll come back to where you said the economy and the market, because
Yep.
that's a whole different
100%.
topic. But you talked about AI, right? And I think AI is great in a lot of different aspects of real estate market. But where I think AI will never take our job over is being there on the ground and knowing the difference between one house to the other. AI does not know what upgrades have been done to the house. AI does not know the value of this layout compared to some, like a different layout, or in terms of lot sizes, kitchen upgrades, or stuff like that, right? So I know everybody is big on AI, and there is a lot of different apps out there and services out there that will actually give you house values. But I think because every house and every transaction is different, you can't really predict the price, because even when we list prices, or sorry, when we list properties, you and I can do all the homework, right? The client can do all the homework based on the data that we have. But ultimately, I think the market decides what it'll sell for.
100%.
I might think it's 1.2, you might think it's 1.3.
Yep.
That's great, right? We want 1.25, let's say. But if the market's giving you 1.1 or 1.15, we can't decide that, right? So what do you think the AI and the price valuation that the AI does come into play? And do you see a future in that, or how would that change?
So I think that's a multi-tiered question that you're asking, but some simple feedback on that. One, with regard to pricing. I mean, our real estate market sometimes, I think, confuses itself with the stock market. What I mean by that is, if you've been noticing the market over the last few weeks, right? The market dipped a little bit. In the sense, prices may have not dropped yet, but traction to properties we saw slow down. Whereas a month ago, we saw multiple offers almost, getting sold on the date of offer date. When we went back, and I think me and you discussed this, I spoke with some of the mortgage brokers we work with. The change that happened to fuel it this way was there was reports that came out that bond rates are going to go up, which led to fixed rates going up. And with that, people literally slowed down. But opposite to that, when we saw the market heat up a few months ago, and everything started selling, literally we saw fixed rates were lower. You could get as low as 4.89, and that fueled. So basically, everything is running correlation to that. So now, to touch on the AI topic with that, how would AI be able to run with that and people's emotions that are involved with watching the rate and moving with the market? Those are things I don't know if AI will be able to integrate to making those decisions. Maybe it will many years from now when it understands people more. That is something I think we still have to understand. But I don't believe they will be able to replace a realtor's job especially a good realtor that knows their stuff, because opinion matters in value, especially when it comes to houses. And I don't think AI will be opinionated. I could be wrong.
AI can do a lot of things, I think, and it's a very broad topic. But I think actually looking at the property and giving it a value, I'm sure AI can do a lot of good things, but I think realtors or real estate market will help us. It will it will complement the market, but I don't think it will take over the market.
100%. I agree with that. I believe it's a great ally for the business.
Yeah.
But when it comes to being a sole product that can, I don't think that's going to happen.
You mentioned that a few weeks ago the market was hot, then it slowed down. A few months ago also the market was hot, then it slowed down. Obviously the bond rate going up or going down, like there's so many factors, right? There are so many factors every week, every month. Our market is obviously in tune with that and changes with those factors. But do you think that the change in the bond market or the change in the interest rate from 4.89 to 5.12 or 5.2 or 5.3, or some sellers, which I'm sure we both have experience with. I was literally dealing with somebody like that in the beginning of the year where they only wanted an X price. If it was lower than that, they just wouldn't consider it, right? But in the grand scheme of things, also with the interest rate going up or down or the market, like in a grand scheme of things, where do you see that, or why do you think people are making such decisions? As in 4.89 for 3 years, because I personally saw from a bank that we just got somebody approved 2 weeks ago, 4 point I think 95 3 year fixed, compared to maybe now it's a bit higher, but the higher the differential, does it really make a big difference over the next 5 years, or where do you see the market going in that, like?
So in the dollar perspective, I don't think it makes a big difference. 0.2%. Like it's really pennies on the dollar when you look at your amortization scale. But what I think does it for people is it gives them a little bit of confidence. That's what it is. When they see the rates coming down, people were under the impression, everyone was under the impression that, okay, now from here, it's going to continue to go down.
So is it more so a psychological barrier then?
I believe so.
That, hey, the rates are going to come down, they're going to come down, I'm going to wait. Because when we look at the sales, when we look at the average price, right? The average price, even from last month to this month, has gone up. Mm-hmm. But the sales weren't there, right? The sales are less, but the price has gone up. So even though that the rates are high, the average price still keep going up. But of course, now there's micro markets, there is different kind of assets. There is, like, I know if we look at just the Toronto real, like just the 416 market or the core Toronto, the detached and semi-detached are doing really well, right? Compared to the condo market, it's not doing well, right? But how, like, what's the people's perception there in terms of, I guess let me better state my question in terms of the barrier. Why is that such a concern for people where the prices are still going up and sales are not there, but the rates have also gone up?
That's it. Okay, so with the interest rate barrier you're asking, first of all, right? So with interest rate, like I said earlier, I think it's more of a psychological thing. That's what it is. As people saw the rates go up, I believe they just, in their mind, they're going, okay, it's going to continue to go up more, the prices will drop. And that was their mental barrier there. When rates are going down, people are thinking, okay, it's going to continue to go down. What happens when rate goes down, price goes up? So everyone's trying to find that perfect in-between balance.
Yeah, because in the Toronto market right now, the condos are 3.7
months of inventory,
which is more so towards the balanced market. But if you look at the semi-detached or detached, semi-detached especially, it's a 1.2 months of inventory, right? So it's a seller's market. Mm-hmm. And the condo market, I know, is taking a beating right now, and that probably leads us to my next question to you, and that's one of the different perspective or opinion that you and I have in terms of investments. Initially, you mentioned that you have focused on the low-rise side of investments, and there's also the high-rise side of it, or I guess the condo side of investments. What do you think is the biggest difference? Because right now the condo side is taking a beating, and I know you have been somebody who is very interested in the low-rise, right? And I know most of my guys, or a chunk of my business, is condo investments, right? Pre-con condo investments, that's what we do. So you're on the opposite side, where you only focus on freehold and you focus on detached houses, or I guess townhouses.
So ideally, for me, I know, like you said earlier, we've always had a difference in opinion on this. I think it comes back to a lot more of traditional thinking too, and that was just the environment I was raised in, the way I was taught to look at, which was, one, you own the land, right? You control the house. Whatever you decide to do, you can do. You don't need permission to do anything. And when I reinforced that decision was actually during when COVID started, and we were trying to get some condo units sold, and we had to go and deal with property management who wasn't allowing us to show the units. And that further gave me the thought process, okay, someone else controls your property. You own $1 million condo or $700,000 condo, but you don't decide what you do with it. And that thought process is really what kept me to the freehold. And another big thing is during the time I started in real estate, you could pick up, like there was freehold properties and projects we were investing in where between $300,000 and $500,000 you were getting into a brand new detached home, right? And those properties that people got into, I mean, now are worth $1.5 million in some cases or whatever it may be. And it always made sense. Then or now, cash flowing wasn't the focus. We were focused a lot more on appreciation-based investing. That we saw best results, I personally find, through freehold market, detached wherever you could get in. And up until 2022, we saw those results. And then when the market changed, it helped us now see a different perspective of things. And we said, okay, you know what? A lot of our investors made good capital. Now let's switch that over and take them into cash flow. And with cash flow too, when I sat down, assessed numbers, looked at things, it's very hard to do in the condo market, even till this time. People that are investing, I find, in the condo market amongst our clients are people that are looking to put money into those properties where in the future they can live, or they're looking to put money in slowly. And a lot of builders are offering that right now. But one thing that we tell the clients is, hey, listen, you're buying this condo with the builder for $800,000. On the resale side, it's $650,000 or $700,000. Sure, it closes in 5 years, but if you're okay with, the fact that you're paying $150,000 more, which in a lot of cases, I mean, I'm sure you had clients that when you explain that to, they go, yes, we still want to do this because we don't want a mortgage now. We want to put a deposit over 2-3 years, and we want to deal with that side of it later on.
100%. I think there is definitely two different set, I guess, of thinking or buyers.
Yeah.
Because whenever I do a condo investment or pre-con investment, I'm sure when you do freehold townhouse or I personally always lay out, okay, well, this is the pre-con and this is the resale. This is the price. These are the comparables in the same vicinity, similar units. We do our homework, right? But even after doing that, a lot of investors that I've dealt with are perfectly okay with it because, again, they have the luxury of saving up their down payment over the next 4 years. They have the luxury of not getting a mortgage and hoping that the property also appreciates, right? Because they're going for an appreciation approach. Because in the condo market, it's tough to get cash flow unless you buy on the outskirts or you bought a while ago, right? Right now, I would say a good chunk of downtown investments are negative cash flow. But also with that, the way I like to tell my clients or the potential investor, I like to lay it out fully for them, and I'm sure my clients can attest to that, where I'll show them exactly what it will cost them to service that property. If it's a $500 negative cash flow, $400, or let's say even if it's $1,000 negative cash flow, I've seen that happen, right? One of my clients right now is closing on a property where we bought it in 2019 or 2020, and she is negative cash flow. Of course, the market is down right now. In 2020, when we bought it, or 2019, we had no idea COVID would happen
100%.
or would hit. So at that time, we did all the homework. I still have all my data that I showed her at that time because, again, 5 years ago, I probably have forgotten now what I showed her. But at that time, I've kept the records. But to come back to the points of negative cash flow, you can look at it as negative cash flow, or you can look at it as forced savings, right? As long as all your expenses are paid off from the rent, and if you got to put down $500, $400, or $1,000 even, that's going towards your principal. It's essentially forced savings because you'll get that money back if and when you sell the property, right? We also preach that holding assets is worth because time in the market is better than time out the market, and you can't time the market. So pre-con investment wise, of course, you're right that sometimes resale is cheaper. And I think as agents or as people who are advising people or clients, it's very important to show them the difference, right? But at the same time, a lot of people actually like the luxury. And when you're paying more on the pre-con side, let's say it's $1,000. I guess it's also the luxury tax of not getting a mortgage for 4 years, putting the money down slowly over a span of X amount of months, and then eventually closing on that property, getting a mortgage. Right now, people ask us all the time, hey, is it worth getting into um, resale or pre-con, right? We know that the pre-con prices are higher, condos or sometimes low rise, but we also have to take into account that the cost for land, cost for building, cost for material, cost for labor has gone up, right? So the builders are not in a place to, I guess, just lower the prices all of a sudden to bring it in tune with the resale market. But I guess that's where the resale and the pre-con markets are different, right? And you're basically, I guess everybody essentially always hopes for the appreciation market to go up and then they cash out.
Exactly. And I mean, it worked for many years, the appreciation
Of
market
course.
aspect. Now, once the market starts to, I guess, turn around and fix up, we'll see how the next set of run is, right, with
Yeah,
appreciation.
and every project is not a good investment,
Of course.
but there are very good investments
Yes.
over, I guess, our South GTA market.
Yep.
I feel like there's a lot of good investments, and there's a lot of builders actually offering a lot of incentives now
100%.
on the low rise and the high rise. But you gotta know the people that you're working with. You gotta trust them because they're actually showing you the information, talking to the builders. They should be doing that, of course, and showing you the difference. Right?
100%.
There are a lot of good opportunities, but there are a lot of bad opportunities out there right now too.
There is. And that's where you really have to make sure the due diligence is done, that it's good projects or good builders you're working with,
100%.
right? Because the press in the economy right now is hurting a lot of builders. And what I mean by that is they didn't, when they probably started this project, they weren't anticipating rates to be this high. So they're in a position right now where buyers need a lot more selling to purchase,
Of course.
and their borrowing costs are higher. And like you said, all the other expenses are higher, but they can't just drop the price,
Of course.
right? So they're trying to do as much as they can for the clients, but sometimes, like you said, if it's a good project, it makes sense.
100%.
Sometimes it doesn't.
Let me ask you one last question before we wrap up this investment segment of the talk. What is your least favorite investment opportunity in the last year or last few months that you have seen, or your favorite opportunity? And basically what I mean by that is that the GTA market, or I guess Toronto, Durham, York, Peel, properties are expensive, right?
Yep.
And you're unable to get cash flow unless you put a huge chunk of down payment. But I know you have done investments on the east side, and when I mean east, like far east from Durham, and we've also looked into opportunities on the west end. So I'll shut up, but I'll leave it to you. What is your least and favorite opportunity right now that you're also talking to clients about, or for yourself?
So ideally right now in this market, with rates being what it is, it's impossible. Well, unless you put a big down payment, it's impossible to cash flow within Toronto or surrounding. If you go further east, for example, one of our favorite places to take clients, especially since COVID started, was Kingston Market, right? Kingston Market, rent's good. There are a lot of service-related jobs with people that are living there. Real estate prices are cheap. And, well, cheap is not the right word, but it's affordable. So when you get in there, you have clients purchase the right investment. Let that be a detached dwelling with a basement apartment, or a duplex, triplex, quadplex, whatever it may be. There's a good chance, even with these rates, with not such a high down, but a reasonable down, you can break even, right? In some cases, cash flow. So if you get into the right property right now, our perspective on it is, once you renew your mortgage in 2 years or 3 years, and the economy is hopefully balanced by then and rates are down, then you'll be making a much higher cash flow. So before, our perspective always was stay, close to Toronto. But that was when we were appreciation focused. And now with a lot of our investors saying, okay, let's go cash flow focus. And for that, you got to get out of Toronto. You can still make cash flow in Toronto, let me be clear, but you have to put significant down. But with less down for it to make sense, you can go outside the city and you can make some good money. On the opposite side of it, what you're probably expecting when you go out there and you make that cash flow is when the markets start to appreciate, it probably won't appreciate as much as the Toronto market. And that's the truth there. When you're in Toronto, if it's booming, surrounding cities, you'll make good appreciation. But then the handoff you're giving is an economy like this, you'll be doing a hefty negative cash flow. When you're out of the city, you'll break even in this market, maybe make some decent cash flow, but it won't appreciate at a rate that the rest of the market is. So far, I've had a lot of clients. I mean, there's been a lot of guys on our teams that had a lot of clients that went out to Kingston, even Belleville, and they've done quite well for themselves. My small tip there would be, if you are going out of town to invest, that the focus is based on places that self-service themselves, have jobs there, have their own economy that runs well, not just a town that's out in the middle of nowhere where it would be hard for the client there to service their mortgage. So that kind of due diligence.
Of course, I feel like whenever you do make an investment, wherever you make an investment, you got to look at the factors that
100%.
service the town: transportation, employment, healthcare. And those things, of course, are very important. And I know East and West, London and Kingston are opportunities that we have looked at, 100%. Worked in, and are great markets, right? Along with the GTA market. But again, the cash outlay is much different in the outskirts compared to in the GTA or the Toronto market, right? And as I'm sure your parents and my parents always say that cash is king, and then we're coming back to the cash flow is also king now.
100%.
Because it has gotten expensive, but also you gotta go out and look for the right opportunities, partner up with the right people, partner up with the right, associates to work with, and then do some great investments. Right?
Exactly. And just to finish up on that investment side, within the GTA, there's great opportunities to make money, but you would have to focus on other things like value add or develop a piece of land and sell, or whatever that may be.
Yeah, and then I don't know much about these topics yet, but adding units or laneway housing and stuff, which is another hot topic that people are doing. I know we're 100%. Learning about it right now, but it is definitely, like you said, value add. So to end off, I have some very lightning fast questions where we and the viewers and maybe even your own friends might get to know you a little bit better. So I'm going to ask you a few lightning questions, and the first thing that comes to your mind, go at it. Okay?
Sounds good.
Favorite food?
Pizza.
I figured. Favorite movie?
Oh man, that's a good question. I don't know if I have a favorite movie, but Fast and the Furious, I guess.
That's your favorite movie? Okay, we'll take it. What book should everybody read? One book.
Think and Grow Rich.
I know you have lived by that book for a very long time. Favorite app?
Realm now. It makes life so easy.
Okay.
Before that, probably the mortgage app.
Okay.
Both of them. It's those are. I ride by those apps.
So when I said in the beginning that Ramaan does live and breathe real estate, this is proof of that, because his favorite apps are Realm and Mortgage. Favorite hobby?
Man, I don't know. I don't really think I have a hobby.
Hey, when I'm on that side, I would definitely be also just like, what the hell? Because I guess when people ask you this question, you're like, shit, damn, isn't that boring?
No, I've always wanted to pick up on a hobby, but I always start, but the follow through, it's not easy with the schedules we have. But
I do know 2 or 3 of your hobbies, but I guess I'll either let you say it or I'll just keep them to myself. Favorite kind of music?
Hip hop,
Okay. Favorite day of the week?
Friday,
Why?
get together with the boys.
Okay, okay. But I guess lately not as much because
It
you
is a
have your
lot
hands
less,
tied.
but I find with the load of stress that comes with their work, once a week, if you don't, I mean, you're with family and stuff too, but once a week, if you don't get a chance to just get with your boys and just, I mean, and the boys are all real estate and finance focused too, so everyone's on the same page. We try our best to
What's a dream holiday for you?
dream holiday, a year in Thailand.
A year in Thailand. And I know you just came back from Thailand and
I was there for a month.
you and
It's
your
beautiful.
friend have been raving about Thailand.
Yeah,
So maybe we
yeah.
gotta check it out one day. Lastly, I know you're probably used to this tagline, which I know somebody else asks this question that you and I know. But what's a beautiful life to you?
A beautiful life. A beautiful life to me is. Are you asking like what a typical day or like,
No, what's a beautiful life to you?
beautiful life
Like I
would
know
be,
you work hard for your family, but what's the end goal?
end goal is to create enough cash flow to live a comfortable life while making sure that I leave behind the right structure for my family.
100%. And thank you very much for joining me today. I know in the beginning when you and I were off camera, we're like, what the hell, man? Like, how is this going to be? But I think we have these chats all the time at the office anyways. The difference was that this time the cameras are on, and a lot of the time when we have these chats, the cameras are not on. But again, thank you, and thank you for coming out of your comfort zone, and of course coming on the camera, joining me, being a guest on the Lodhi Roundup, and for the people that are still watching me that have come to the end, thank you very much. And if this was valuable to you, please share it with your friends, family, and your partner. That way we can bring value to them as well. Thank you, and see you on the next one.
Thank you.